Welcome to this explainer. Go ahead and pull up a chair because today we're diving into a real masterclass on exactly how you can completely shift your mindset to build lasting wealth. Think of our time together today as a one-on-one mentorship session. My entire goal here is to totally rewire how you view money, investing, and risk. We're going to break down 10 timeless rules, what you might call an Oracle's Decalogue, that have generated arguably some of the absolute greatest fortunes in modern history. So let's get right to it.
Let me ask you something, and I want you to be brutally honest with yourself here. If someone walked up and handed you $1,000 right now, no strings attached whatsoever, what would you actually do with it? Let's be real, most people wouldn't invest it. Most people would probably spend it on a new phone or maybe a weekend trip, something fleeting that feels amazing for about 4 days and then just totally disappears. They stay completely unaware of what that money could actually become. And look, I don't blame you if that's your first instinct. Nobody ever sat you down and showed you the exact mechanism that separates the people who build real, lasting wealth from the folks who work incredibly hard but end up with nothing. It isn't luck. It's not even about having a sky-high IQ. It is simply a set of rules.
Take a look at this exact number, $114.75. The legendary investor we are studying today started with exactly this amount at just 11 years old in Omaha. Delivering newspapers before the sun even came up, he was already wondering if there was a smarter way to build wealth. Today, I want to share the 10 rules he quietly followed for over 70 years to transform that literal pocket change into an absolute empire. Because the gap between where you are right now and where you want to be, it's not money, it's knowledge. Okay, let's kick things off with phase 1, deconstruction. We need to start by tearing down the destructive habits that are keeping you broke. And that begins with rule 1. Never lose money. Now, you're probably rolling your eyes thinking, well, obviously, nobody actually wants to lose money, but I want you to pause and really look at the math for a second. If your investment drops by 50%, you don't just need a 50% gain to recover. No, you need a 100% gain, a complete double, just to get back to the starting line. A single loss doesn't just subtract from your total, it multiplies backwards. It literally steals the years your money would have quietly spent growing. Protect the downside and the upside will take care of itself. And that brings us to rule 2. Listen, as your mentor today, if there's one critical shift I need you to make, it's this. You must completely stop acting like a gambler and start thinking like a business owner. When gamblers buy a stock, they just watch a little number bounce up and down on a screen. Their emotions go along for the ride. But buying a stock without understanding the underlying business, that isn't investing. That's just gambling with extra steps. I want you to think like an owner. Ask yourself, if I were buying this entire company, the offices, the employees, the debt, the customer relationships, would I genuinely be happy holding on to it for the next 20 years? If the answer is yes, you buy. Stop being a gambler. Start being an owner.
Which leads us perfectly into rule 3. Learn to do nothing. I know, doing nothing feels so passive, maybe even irresponsible when everyone around you is screaming about the next big hot stock, but the stock market is literally a machine designed to transfer wealth from the impatient to the patient. While doubt is incredibly loud and frantic activity feels productive, quiet patience is what actually builds fortunes. Think about holding massive consumer brands like Coca-Cola or Amex through crashes, major scandals, and years where they were genuinely unfashionable. The market profits from human impatience every single day. You need to defy it by simply sitting still.
Moving right along, we arrive at phase 2, reconstruction.
So, now that we've completely abandoned the gambler mindset, let's reconstruct how you view the market with rule 4. Price is what you pay, but value is what you get. The market is just offering you prices. Your job as a business owner is to understand the actual values. Just imagine walking up to a garage sale and finding a beautifully crafted $500 watch priced at $40. You wouldn't form a committee to think about it, right? You'd buy it immediately because you instantly recognize the price is dramatically below its actual value. That is genuinely all investing is at its core. The market is basically an emotional auction house, and your job is just to wait for those irrational moments when it offers you incredible value for a really cheap price. But hey, quick warning here, which brings us to our next vital principle. Charlie Munger practically hit his partner over the head with this advice to permanently shift his strategy. Stop buying terrible businesses at wonderful prices. Start buying wonderful businesses at fair prices. Listen, cheap and undervalued are absolutely not the same thing. Confusing them is an incredibly expensive mistake. A statistically cheap business that is dying is still a dying business. You've got to shift your strategy toward true, lasting value. So the crucial point is knowing exactly what you are actually capable of evaluating. This is Rule 6. Never invest outside your circle of competence. Admitting you don't understand a flashy new tech boom is not a weakness. Investing in it anyway, that's a weakness. You need the kind of depth where you could be locked in a room and easily explain every major risk and opportunity for a company for 2 hours straight. A small circle that you understand completely beats a massive circle you barely understand. Safely stick to the industries you know cold, like maybe consumer brands or banking, and leave the rest alone.
Now for Rule 7, I need you to slow down and really grasp this specific number, $12,000. If you took just one single dollar and invested it way back in the year 1900 at a historically reasonable 10% annual return, it would be worth over $12,000 today. One single dollar. It didn't take a genius, and it didn't take daily management. It was just time, silently doing its work.
Because here's the reality. Time is the engine, and money is just the fuel. Compound interest is a mathematical reality that savagely punishes delay. The first 20 years barely look like anything is happening, but then it accelerates into numbers that look like typos. A 22-year-old who starts now has a completely different financial destination than the 30-year-old who hesitates. Every single year you wait isn't just 1 year of growth you miss, it's that year multiplied by every year that follows it. You have to start today.
All right, that brings us to the final stage, Phase 3, fortification.
This final phase is all about playing defense. It's about protecting your assets, your mind, and your reputation so you actually get to keep the wealth you build. These 4 final rules are your ultimate shield against disaster. Invest in your mind first. Never borrow money to invest. Choose truth-telling partners who challenge your blind spots. And treat your reputation as your most valuable, irreplaceable asset. Let's look a bit closer at how to actually apply these.
Let me highlight Rule 5, investing in your mind first. Imagine being a terrified teenager who literally shakes at the thought of speaking in public. Taking a $100 Dale Carnegie public speaking course, paid out of pocket rather than putting that cash into stocks, was the absolute ultimate investment. That single skill compounded over 70 years through every single negotiation and partnership. Your communication skills, your emotional intelligence, your judgment, these are untaxable assets that work for you 24/7. Always invest in your mind before you invest a single dollar anywhere else.
And regarding Rule 8, the rule to never borrow money to invest, listen, I have watched brilliant minds with incredible market instincts get catastrophically wiped out. Why? Because leverage, or investing with borrowed money, heavily amplifies your losses. And even worse, borrowed money comes with deadlines. Margin calls force you to repay those loans immediately, meaning you are forced to sell your absolute best positions at the worst possible moments, usually right before the market bounces back. One bad year with leverage can easily erase 10 years of brilliant decisions. Just don't do it.
Then we have Rule 10, the ultimate safeguard. Guard your reputation fiercely. I want you to apply what we call the newspaper test to every single deal you ever make. Would you be completely comfortable if your hometown paper printed your exact actions on the front page tomorrow for your family to read over breakfast? If the answer is no, you walk away immediately. It does not matter how much money is on the table. It takes 20 years to build a reputation and about 20 minutes to completely destroy it. Your reputation is the multiplier that makes every other asset in your life worth more. So, bringing this all together into one final hard truth. The real secret of this explainer isn't just knowing the rules themselves. I mean, these concepts have been public knowledge for a century. The real secret is having the brutal, relentless discipline to actually follow them. When the market is on fire and the crowd is rushing left, waiting just feels like losing. Doing nothing feels like a failure. But the true discipline is in following the rules quietly, consistently, and without any applause, even when every instinct in your body tells you to panic. That is the exact difference between those who build lasting wealth and those who almost did.
So here we are. You now know exactly what the greatest financial minds know. But what are you going to do with it? Most people will feel incredibly motivated for a few hours today, and then they'll go right back to their old habits tomorrow. A few of you, however, will write these rules down. You'll let them shape your decisions, acting like true business owners for the next 30 years. And down the road, people are going to call you lucky. They'll think the universe just magically handed you a fortune, but they'll be wrong. You won't be lucky. You'll just be the one who actually followed the rules. So, will you be the one who executes or just the one who watches from the sidelines?